We're joined now by Biju Samuel of Elara Securities. Thank you so much, Biju, for joining in. And let's speak about the Nifty, because you've made a statement or you've made a call in the Nifty 50. It's currently at 17,350, but you're saying that this is only a step in the journey in the medium term that will take it to as high as 19,600. How far do you think that target is? Because I think a lot of people were surprised at the pace at which it reached where it is right now. And what are the factors that will lead it to that point?
Yeah, one thing is we've been mentioning this that we are in the early years of a very large multi-year bull market. We've been highlighting that since April last year. Based on our framework, we were also maintaining that there is less crash risk till at least November this year. That is based on some of the breakout thrust and all what we've seen in November last year. April, May, we've seen a significant change of hands, big accumulation. One big set of investors were profit booking, and it was moving to another large set of investors. That was the period, April, May. In fact, we've come out with a note called second wave resilience. And from April, we were expecting till November as a minimum shelf life for that takeoff. Right now, we have sufficient evidence to make some very, though looks a little far-fetched, but very realistic projections on the Nifty, because the latest move has sort of finally taken out decisively a 10-year channel on Nifty. So that's something which we've highlighted in our report. So once you have such a secular channel, it gives an advantage in projecting. And when you project the size of that channel, it works out in 19,600. That's the 1x size of that, which is generally the minimum. When you have a 10-year channel like that, which is broken, obviously it is not going to end at 1x size. So if you look at the 2x size, I know it works out to 24,000 and stuff like that. So the overall, we have a platform for a very large market move. And in this latest move, what we are seeing is there is a shift towards the front line. The frontline leadership is kind of re-emerged, which was actually the frontliners were neglected, especially the large heavyweights and all since April to July. And now, so that's kind of is reverting. The frontline leadership is back. We've seen an exuberance on the small caps and micro caps from April to July, especially mid-July was that flashpoint where the micro caps had its massive exuberance, and we've seen extreme neglect of the large caps. And that theme is changing since mid-July. And so that's why the impact on the Nifty would be much larger.
Understood.
This time. Yeah.
Biju, I understand. I take your point entirely, and it's encouraging, in fact, for the viewers tuning in, that we could be in the midst of a very secular uptrend, and you made a cautious projection as far as that 19,600 mark is concerned. But having said that, are you or do you have any concerns with regard to the rapidity that we've gained? So a month back, we were 1,000 points low on the Nifty 50. Does that raise concerns on the price to earnings multiples? Has the earnings really caught up, and therefore is there a downside risk if we see earnings not keep up with the kind of pace that we've seen the Nifty grow at?
The fundamental underpinnings behind this, I will not be the right person. I look at what is happening at the trend level. One thing you can see is, let's say the stocks which are leading this uptrend right now, let's say Reliance, it had built a base for a year before the last 2 days move. So it's not a situation where a lot of these stocks which are now moving are already been vertically up maybe since the last 6 months. We are not in that situation. In fact, a lot of them were consolidating. They were underperforming, in fact. And with this breakout now, it's clearly like leaving a trail of, big base, a 1 year base, 8 months base, at least 6 months base is there in a lot of stocks which are leading right now. So which actually gives sufficient reason to believe that this is sustainable. And even the broader market, that's something I highlighted. We've seen an internal oversold just 7-8 days back, which is when half the stocks they reached an oversold simultaneously. In fact, the last time we've seen that was in January. So in a bull market, such oversold is a very fleeting moment, and from where the next 6 months type uptrend is launched. So that's something which makes me believe that we are not overheated here. The overheated segments of the market, they've actually, we've seen a risk off from mid-July to exactly August end. So that's when we've seen on an average 20% fall in most of the small cap stocks actually. So that excess is played out with the bull market correction there. And so what I'm saying is we are just coming out of a broader market oversold. So at this, and if I get into some of the supportive factors, one thing is at the EM level, I am finding some things turning favorable right now. And also at the currency level. So that's one of the reasons we got a little, inspired to sort of turn a little ambitious on the upside. Yeah.
Okay. Biju, I want to talk because we've not spoken about this so far. We've spoken about mid caps and small caps, but I want to talk about the bank Nifty as well. The Nifty 50 is at a record high, but the bank Nifty isn't. And seeing that it has the most, weightage as well on the benchmark index, and you have a target of 19,600 for the Nifty 50. How do you see the bank Nifty contribute? Do you expect this one to take leadership? How do you see the Nifty bank moving?
There is a high probability, at least in the next 3-4 months. I think some of the heavyweights which were underperforming or neglected, they need to contribute for this kind of a move, which is what it seems to be building in. Bank Nifty had a 3 months base building in some sort of a slightly rising channel, a 3 months channel, which is broken few days back. So I'm seeing at least visibility of a short-term 12% move on Bank Nifty on the upside. So I fully agree that Bank Nifty could be a contributor here. Only thing I am not clear is the larger the structural dimensions of that. So at least a 3 to 4 months outperformance of Bank Nifty seems to be opening up here. This sector has overowned stocks which are underperforming. So I think this could be a little tactical, except select banks like ICICI Bank or Axis. Axis, for example, after almost 8-10 months, it's a new high break. So these new highs which are happening after almost 8-10 months or 12 months, I think it indicates that these stocks are declaring, like Axis, that they are aligning to this cycle. ICICI Bank or State Bank, where the structural merits are there, they might have larger run, but the rest of the banking piece, I would say it could be more tactical outperformance of 3-4 months.
Okay. Biju, you've spoken a bit about the currency factor, about the dollar index managing to do pretty well. Falling actually, pardon me. It's at the lowest level in a month, and that is something that bodes well for the Asian markets. Now, I know, I'm going to talk a bit of fundamentals over here. The reason behind the dollar fall is, of course, the fact that, we had weak macroeconomic indicators. But guess what? We had the taper news as well. That's just around the corner, just around the anvil. If the dollar turns the corner, how do you see that board for the Nifty 50? And also, what's your take on the dollar index as well? The way we've sort of seen that pendulum move, because just a month ago it was at 93.5. Now the lowest that we saw was 92.05.
Yes, actually on dollar front, I am finding, in fact, I don't look at the fundamental aspects, but I look at the behavioral and quantitative data. So one trigger which I am finding now is most of the shorts, especially the retail shorts, which I was saying very interesting signs, they've fully covered with the latest strength. Recently, just before the market slipped, the dollar, just before the recent slip in dollar index, there was a brief breakout attempt. It was, 93.75 on DXY. it actually created a flutter in the system that the dollar is finally taking off type. A lot of those bears actually, given up that point. And after that, the dollar slipped. In fact, in January, the entire planet was short on dollar, and there was absolute one-sided consensus that dollar is going to break down. And what seems to have happened is that that breakdown confidence is completely evaporated recently. The shorts are covered, and the larger structure, I think, is kind of a pre-breakdown kind of pattern. So my sense is that maybe with this short covering which has happened, and after that the dollar is slipped, this could be the point where the dollar could begin the process of breakdown. So, which I think the rupee itself, last week, recently, we've seen the strength in the rupee. And in fact, one feature there was rupee was actually underperforming the Asian currencies last 2 years. And that underperforming structure is broken out. So first, we have an equity outperformance since July. Indian equities were outperforming the emerging market equities in a different way since July. That was along with the turbulence in China, the Chinese equities, which actually favored India's outperformance from June actually. In fact, it was a 3-year breakout in India's leadership within EM. Which I think is something significant. Though it has outperformed a little steeply since the last few weeks, I think it's not temporary. So I think it's a kind of a new structural possibility. India is entering a new trajectory of outperformance within the EM. And after that, right now, we are seeing the currency also turning around and dollar weakness, whatever, so Indian rupees turning around possibility. I think that is also auguring well for that entire setup. I wouldn't be surprised if, my sense is that the flows will turn robust, because there could be a perceptual shift towards ex-China universe within the EM, so which will benefit India a lot. So I think,
Biju, you know what? Yeah, Biju, unfortunately, we are a bit short on time, so I'll have to just cut you right there. But we got your point. It's going to be positive for flows, the entire concoction of scenarios coming together, especially with respect to China. Thanks so much, Biju. Really appreciate you taking out time to joining us for this conversation. We're going to take a very short break on the show. Be right back with more.